Now we're talking back to work tonight, guys. Hope you guys had a fantastic quad witching break, but it's about that time of day again here. It's September the 20th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades setting up for tomorrow. That's Tuesday's trading session. I got a great video in store for you tonight. Charts are all ready in the background. As you can see, S&P's ready, Nasdaq's ready, the gold. Gold is always ready, isn't it? Hopefully you guys are ready to party right along with me here tonight on this video. Get some great trades on my radar for Tuesday. Got some real big, strong moves on the E-minis. Got some ranges on the gold. Got some reversal setups. Got some pullback setups. Got some breakouts. Boy, there is no shortage of great trades setting up for Tuesday. By the end of this video tonight, you'll know my favorite trades for tomorrow. You'll also know the stuff to avoid tomorrow to keep yourself out of trouble, whether you're trading on your own or whether you're trading with us tomorrow morning in our daily trade room. Before we jump into the video tonight, though, as always, I want to make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas. I don't want you to miss tomorrow night's video, so hit that subscribe button, hit that little bell icon so you always get notified every time I publish something new. If you guys have any questions tonight, I'd love to answer questions. Drop those questions for me in the comment section below. And if you guys enjoy the video, do me a favor, hit that like button, that thumbs up here on this YouTube video. Really appreciate you guys carving some time out with me and joining me every evening on this nightly newsletter. But speaking of newsletter, let's get this thing going here, shall we? Monday is in the rear view. Tuesday is right around the corner. We got a busy week ahead of us. We got some major news tomorrow morning, and boy, if this wasn't a good kick in the pants to get us going here this week, I don't know what was. Right? We are right in the thick of the fall trading season, which is really the best time to be a trader, right? All the way and through until next April, really. When the weather cools off, the markets always heat up. Where's my favorite trades for tomorrow? Big moves down on the S&P, big moves down on the Nasdaq. There are a ton of trades setting up right now on both of these. Obviously, we'd love to short this thing, back down to retest a low. That's kind of a given, right? Possibly a third leg going lower. So we definitely have some short setups I'm looking for as we go. But at the same time, though, look at how strong this bounce was. This is definitely a very strong bounce. And anytime we see a strong bounce like that, boy, all of a sudden we might be looking at reversals. I got some targets up overhead, 08 and a quarter, right? 282 and 3/4 overhead. So I am not scared of being a buyer in this market right now if we can get the right signal. We'll talk about what to look for, how to know when it's time to be a buyer on this Nasdaq or the S&P. We'll cover those details as we go deeper into this video here. Over on the gold is a beautiful short right now. We have a range down below us. I would love to get some shorts going on, and really the gold has a great potential to give us a short into a breakout pullback. So if you're trying to get short right now, great spot to get short. But at the same time, though, we're rotating off the low right now. There's a lot of momentum for these bulls. I'd be foolish if I wasn't at least looking for a possible breakout running higher. We've got a bunch of levels overhead here. So, again, I got some great long side trades, some great short side trades. We are traders, right? We don't care what direction the market goes. We'll take whatever the market gives us. So we got a bunch of trades we're looking for tomorrow. We're going to go over all the more detail here tonight. Before we jump into this video even deeper, though, let's make sure we get on the same page for tomorrow's schedule. Time is definitely a very important piece of the puzzle when it comes to day trading. If you're anything like me, I take a lot of pride in the fact that I help my clients use a small stop loss, small amounts of risk. And so we have to avoid some of the jumpier times in the day. For example, tomorrow we have that housing starts and permits at 8:30 Eastern time tomorrow. That's the big news for tomorrow. And I'll tell you, it's going to really get busy as we go later on this week. We got home sales, FOMC on Wednesday. We get the PMI number, possibly the most important number outside of the FOMC announcement this week's on Thursday. And then, of course, we got J. Powell, and we got the home sales number on Friday at 10 o'clock. So This is going to be a great week to be with us in our trade room. Speaking of trade room, don't forget tomorrow morning, 8 o'clock Eastern time, we're going to trade this stuff together. We got news at 8:30, so we'll have a great front row seat tomorrow morning. I'll put all the details you need to come out and join me every morning as a member. Our advanced membership has lifetime access to our trade room, so I'll put all of the membership information there in the description of the YouTube video, or there'll be a button for you right below me tonight on the website here. So now you get a good idea though what the plan looks like for tomorrow, right? What the schedule looks like. 8:30 Eastern time is the big news tomorrow, and then we'll be trading the reaction, right? 8:40 all the way through till the lunchtime session sets in. I'm pretty excited for tomorrow. We had some big moves on the charts today, and usually that means some pretty good trades the following day as traders try to pick reversals or we get those continuations. Back to our charts here. S&P, Nasdaq, and gold. Why don't we grab first the S&P 500, the E-mini. Of course, the most important components right now. Looking at the S&P 500, what's going on? What's the most important factor that we saw here? Well, the most important factor is we're definitely very bearish. You can obviously see that. We had a very big, strong run down today. Nice big push down into a trading range. We kind of stumbled around there for the first part of the session today, and then, of course, that big, strong breakdown. And now we have this beautiful example of, it's kind of like a breakout pullback. It's kind of what it is, right? We see a lot of this in our trade room. Now, this is a little more dramatic than we usually see, but you see a lot of this where you'll see a strong move down or up, in this case it's down, into a range. The market spits out and then pulls back. And now all of the kind of the resistance here, right, at the underbelly of this range, the bears want to go back down to retest the low. Simple as that, right? Simple as that. They get a big, strong move down. Anytime we see that much strength in one direction, there is a bullseye right on the low of that move. So sellers would love to get down to that 93, 93.5, 93 and 3/4 area. And of course, if they have their way, we may see a triple measured move at that 42, we'll call it 72, right? 42, 72 as we go. So bears have it pretty easy. They want to sell it back down to retest the low. How about the bulls though? Look at the bulls. The bulls have this really strong push higher, right? So all they have to do is put a little bit of effort into this thing and hold this pullback. And I'll tell you, you can measure the amount below the range, back above the range, and look where that puts us. It puts us right at basically the closing price from last Friday. What a coincidence, right? What a coincidence. So you could easily see either one of these kind of unfolding here right now. Now, right now, the odds are better to be a seller, but that can change really quickly here as you can imagine. So how do we trade it? How do we sell it? How do we buy it? Let's talk about that. Maybe not the easy money, but right now though, with this big bear move down, the buyers have to hold this pullback or else they're going to lose the grip on this and the price will sink back down to retest a low. In my experience, kind of the setups I'm looking for that work best in these situations. Again, we're very strong move down, but you can also see too, it's a pretty strong pop higher. So in these situations, my favorite way to trade these, there's kind of two different setups I look for. The first thing is we have to try to trap in the buyers. You know, that's the big thing. We have a lot of momentum going higher here. Again, a lot of momentum going lower, but we can't ignore the recency, right? There's a lot of recency effect there where the most recent move higher was very strong. So as we pull off those lows here, I would love to get the buyers trying once, get the buyers trying twice. Once we get those buyers trying twice, you normally don't have to look for two tries, but because this is such a big pop off those lows, if it was just a small little pullback like that, I would say, sure, just wait for the buyers to try and sell into their stops, right? That's pretty easy. This is a little more dramatic than a shallow pullback. So I'm going to use what we call the two try rule. 1, 2, let those buyers try twice. All of their stops now will be sitting right below that low. This is the perfect storm to be a seller because you have all of that momentum big bullseye at that low. The buyers are trying feverishly here to reverse this momentum going higher. Again, they're sitting at the high of a channel. Most importantly, sitting right at the underbelly of that trading range. Notorious for being major area of resistance. And I'm looking for that short going back down as we go lower. Now, as we go lower, what you want to think about is a new channel coming down, right? New channel, and then shorting that first pullback. Now, oftentimes, this will end up being a little bit different. It'll be like a move lower like that. And then what you'll do is you'll get that little channel coming over, and it'll be a trap high, right, like that, or a little trap off that high. But that's the general idea you're looking for to short this thing, right? Now, of course, we're going to the overnight session, so we'll see what we get. But I would love to get these buyers try twice, right? Try twice, get a nice strong signal here to the short. And then, of course, as we're going lower, we're selling that first pullback, right, off that new channel back to retest those lows. And I'm telling you right now, the market may really start to bleed lower here. If it was to really bleed lower on strength going lower, I would look for even more traps as we're going, right? Let's say, for example, we get that failure into that short off the high, and then again we roll lower, right? If this thing really starts to puke and fall apart going lower, you know where it wants to go. It wants to get that next measured move. It's just a matter of finding that new channel, wait for that pop, and short it again, right? So there's plenty of ways to sell this thing as we're going lower here. How do we buy it as it's going lower? That's going to be pretty difficult. Only way to get long as we're going lower right now will be to see this market pull back nice and deep. It'll probably come off that midline of that channel. And then just like we used the 2-try rule to rope in the buyers, that is definitely going to be critical to be a buyer right now, because to buy this, the buyers have no momentum right now. It's all bearish. So in this case, the seller's got to come in. They're going to try once. They're going to try twice, and that's when I can get long. This is not going to be an easy long. It's not going to be very easy at all. The buyers really have to show us that they mean this. And you can definitely see how this could set up, right? This could easily be kind of the same basic idea, right? We pull back, bears once. The bears are trying to roll this thing lower. They try twice. Then we get our nice signal to buy into those stops. And of course, we can then mark up that new channel, right, and then grab the entry off the low of that channel, right? That's definitely going to be, again, that's not going to be an easy long trade to take. We'll see what we get here tomorrow once we get some more information in the chart here. What if we go higher here? What if we go higher? How do we buy this market as we're going higher? You know, it really all depends on kind of like how the market goes higher right now. You know, for example, let's say we pull back a little bit further into the moving average and we really blast. If we really blast off the moving average, this is a classic 1, 2, 3 reversal pattern. Once we see those 1, 2, 3 move, now I'm not going to buy that first pullback, but once I see them really jump off the moving average, we know where the market wants to go, right? They want to get all the way back up to fill that weekend gap, as we call it. So imagine now we pull back a bit further, take out that moving average, we jump higher now. Now it's pretty simple. Now just got to mark up that high, got to mark up that low, and then what you want to do is you want to drill down and find the entry off of that low. Now, my 2 favorite entries, I use price action for my entries. I never rely on indicators. The only indicator I use here is this moving average. The 2 favorite entries that I like to use off the low of that channel are traps, basically bear traps, and basically seller failures. It'll usually put us just below the moving average. Now, I'm not going to go over all the small details of those price action entries, but I'll tell you, I do cover all the details of how I find the entries, but more importantly, I cover all the entry setups and the best places to take those setups I cover all that stuff in the quick start class. If you're here for the first time, or maybe you haven't done so yet, I'll tell you, that quick start class will teach you my 3-step strategy, the same strategy we use every day as a roadmap to find 3 to 5 best trades every day in our trade room. If you're trying to earn daily income in the financial markets, that 3-step strategy is going to give you the system that will help get you there faster. So definitely grab that. Definitely grab that link. I'll put a little pop-up there for you. Learn the setups. Most importantly, though, learn where the best place to take the setups are going to be. I'm not going to waste your time by teaching you a bunch of entry patterns. Entry patterns are only as good as where you apply them. Now, here's another setup I'm watching as we go. Let's say we get this market to jump right off of that low. We find our channel from there. What if the market starts to grind, though? What if it grinds? What if it grinds? What if it grinds? If it grinds higher, these are called spiking channels, right? Spike up into a channel. If the market grinds higher, it's pretty simple. You want to wait for a relatively deep pullback, wait to trap in the bears below the moving average, and buy right into their stop losses. Very, very simple plan of attack. So again, if we go up, we pull back and we jump, okay, that's just a straightforward channel, right? Drill down, find the entries I talk about in the quick start class. If the market grinds, which is very possible here, right? If it grinds, those are spiking channels, and the best entry off a spiking channel is always going to be that relatively deep pullback, get underneath the moving average, trap in those bears, and then hit it, right? And then hit it. And there are some other options. We'll talk about that as we go deeper into the Nasdaq here tonight. But that will be the game plan as we go higher. Buyers, of course, right, want to get back up to that weekend gap. Last but not least, what if we go sideways here? What's the plan if we go sideways? If we get stuck inside this range again, a range is a magnet, right? Ranges act like magnets. So in this situation, we have to make a small adjustment. So let's say, for example, the market doesn't blast, it doesn't drop back down again. We start going sideways here. How would I trade this? The first thing I would do is make sure I know where these highs are, and then wait for that breakout, use a buyer failure. And again, you'll learn all the buyer failure techniques. You'll learn how to trigger this stuff in that free trading class I mentioned in the upper right-hand corner. You basically wait for that breakout pullback to fail and sell back down into that trading range, right? Super easy, just like this one back here, right? Once you go into a range, you pop back up, wait for the buyers, and back down again, okay? Now, the hard part on this is going to be if we go sideways and then go lower. That's where we're probably better off being a seller, right? So if we go sideways here, for example, and then we end up rolling lower, the money trade is that roll lower, that shallow pullback, and that trap. That's the money trade right there. If I can find a channel, even better. But that's the money trade as we go lower. So again, if we sit there and go sideways for a while, right? With that, basically, it's not enough to call it a bull market, right? It's just kind of gravitating there sideways. At that point now, I'm going to wait for that pop down, wait for that shallow pullback, that lower low in price, and then hit that sucker, right? Hit that sucker, that trap, as we're hopefully going back down to retest the low. All right, guys, there are some variations of this. We'll cover it more as we go deeper into this video tonight, so make sure you stay tuned the whole video tonight. I'm going to go over more variations of this stuff that can also apply to this S&P, right? But again, don't forget, if you haven't done so yet, grab that quick start class. If you're looking for a nice shortcut, that will really help you out there in the upper right-hand corner there. All right, S&P, love it. Great example of just simple breakout pullback, right? Breakout pullback on the S&P. How about some Nasdaq? Now, Nasdaq is very similar, but there's obviously one big difference, and that is there's no range on this Nasdaq right now. You obviously can see there's that 15,000 big round number, right? Those are also going to act like a bit of magnets. What's the most important factor on this chart right now? You could say the first kind of key component is the strength of this move down. anytime we see this much strength in one direction, there is a big bullseye right on that low. Bottom line, right? Everybody wants to go back and retest the low. That's going to be kind of, priority number one, right? Component number one. What's the second piece of this puzzle? It has to be the strength of that bounce. Remember, anytime we see a strong move, we have to anticipate a retest, right? So strong move down, we anticipate a retest. It may not keep going forever through that area. It may bounce and turn to a range, but anytime we see a strong move, we have to respect that momentum. The strength going higher here, same thing. We have to respect that momentum. That strength going higher really opens the door wide open for the buyers. It also gives these sellers a juicy opportunity here to sell a very nice spot, right? Nice and high. You can see here I've marked up my channel, and we're kind of hanging out right around the high of that channel. I'll tell you, a lot of this on the Nasdaq will be very similar to what we saw on the S&P 500 in the sense of we have this very deep pullback. My job right now really is going to be to rope in these buyers. Right? Get these buyers to try a couple times, make them think this thing has reversed. If I can get these buyers trying once, get them trying twice, you're going to learn a lot about the 2-try rule in that free quick start class that I talked about before, right? 2-try rule. And again, we don't need the 2-try rule in a shallow pullback. Right? Just got to get above that moving average and simply sell into those stops. We don't always need 2 tries, but when you've got this much of a pop off that low, it is very wise to look for that 2-try, right? That's going to give you better results in the long run. So we get the 1, we get the 2, all those stops are sitting right below that low. Now, one variation to make it worth your while to stick around with me here as we go deeper into this video, one variation of this entry is going to be a trap high or a trend line test. Okay, I mentioned earlier how you want to sell into those stop losses, but sometimes we get really lucky and we'll get the buyers once, buyers twice, we'll slip just above that prior high, right? So big pop up, buyers try to keep it going once, trying twice, we get that trap high up there. Nice strong signal there. We call these 2-try failure setups, right? They're basically just buyer failure patterns where we're simply selling, going with long-term momentum, using the buyer stop losses as fuel, ultimately, right? Using those buyer stops as the catalyst to send this market going lower. And then as I mentioned before, as the market rolls lower, my favorite thing, what I always look for is I look for that new channel and then grab a trap, because usually a trap, traps are my favorite entry trigger for whenever I'm worried about selling too low, right? So as we go lower here, what's my concern? My concern is I don't want to sell too close to that low a day, right? So, I want to sell down to it. Like I want to sell way up here. That's great. But as we start getting lower, then you got to start worrying about, okay, how much space do I have? And that's why a trap will really be a very effective way to do it. So again, it's a 2-try failure, right, into that trap. And we see a trap high, maybe it's a trend line, maybe it's a short into stops. You'll see a lot of those variations we'll talk about in that video class. So that's how I want to sell it as we're going lower. You really can't buy this thing as it goes lower because there's no range here. On the S&P, at least the S&P is a range above us. It's a big magnet there. The Nasdaq doesn't have that. So as the market goes lower here, that same 1-2 pop back up is very much a gamble for the buyers. So what will we do if the market goes higher here? Well, first of all, we get a ton of resistance right in this area up overhead. In fact, you could probably bank on the idea there's going to be a lot of bears who would love to sell that, just like we talked about selling the underbelly of that range on the S&P. So don't be afraid if we take out these highs to go 1, 2, and then simply execute that same plan that I talked before. Right? I won't go over it again, right? But the same idea, you know what I mean? Same idea. Let them try twice and then look for that trap entry, right? Off the high of that channel. And then if we go higher here, right? Let's say we pull back to the moving average. and I cover all the indicators, by the way, in that free course I keep mentioning. They pull back to the moving average. They jump off the EMA. Remember, I'm not going to buy that first one. Buying that first one is just it's trade account suicide. Way too much momentum going lower right now. That'll be it's just not reliable enough. You want to wait for it to hold and go. Once we see it jump and run higher here now it's easy. Now we have momentum. Now we know buyers have control. Now we get much more reliable entries, and that's the key, right? Remember, if you're trying to earn daily income or weekly income in these markets, you've got to focus on the most reliable setups. Okay, not what we hope will happen, but we need reliability, and that's where this 1, 2, 3 reversal really helps me out, right? So 1, 2, 3 reversal. And then, of course, we drill down. And like I mentioned in the S&P, my two favorites are traps off the low and failures off that low. Now, failures oftentimes lead into, like, if I can draw it up real quickly for you, failures oftentimes will, if I can draw this thing up here for us, failures will oftentimes trigger just below the moving average. So we pull back, the EMA comes over, right? The bears get roped in. They're trying to sell short, right? We're buying right into those stops. There's your failure. There's your pullback combination, right? It's a seller failure below the moving average into a first pullback combination. And again, I'm just simply kind of drawing on my screen right now. I got a lot more examples of that. In fact, I probably have 100 or so examples of that particular trade setup combination in that quick start class linked up in the upper right hand corner. If the market was to punch, let's say it was to punch, and again, this is a variation you can apply to the S&P as well. If it was to really punch, right? So for example, I'm looking for it to pull back to the moving average. Let's say it pulls back and jumps, then of course I can mark the high, mark the low, and I can buy the low of that channel. What if it doesn't though? What if this market just simply punches and runs higher? At that point, the gig is up. We now know it is a reversal. Now you're looking for traps. One of my favorite trades in a short squeeze, which is basically what this will be. All these bears, right, when they realize they're stuck on the wrong side of the market, they're going to get the heck out of their positions. And that will oftentimes produce a kind of a runaway market where it kind of just grinds and grinds and grinds, right? So, sorry about that. So keep an eye on that, right? Again, if it just simply pops up and starts to really sprint going higher, watch out. We call these 2-try traps. These are one of my favorite trades after a reversal. And again, you can apply the same thing to the S&P as well, right? Like I said earlier, a lot of this stuff is interchangeable here right now. What you want to do is you want to try to find that high, find that big low, grab that trap. Money trade. Yeah, it's you're buying kind of high. But remember, the idea on this is that you have all of that momentum. All the bears are caught. Right? All the bears are caught off guard and the market starts to just sprint, right? As it sprints higher up there, you're looking for any trap, right? Any trap at all. It's a classic short squeeze, right? When the market squeezes like that, when the bears get knocked out, the market rips higher, traps, whatever traps I get into, right? Because this thing will just snap right back up to fill that weekend gap. And then as I mentioned before on the S&P, same thing in the S&P, if we were to kind of pull back and start to grind, right, and grind, you know what I mean? If it starts to kind of grind higher, those are called spiking channels. And spiking channels are notorious for that deep pullback. Those buyers come in, the bears come in, they think this deep pullback is a reversal. They try to sell short. We wait for those bears to foolishly get short, and we can simply buy that failure, that pullback combination. There's another example of what a failure pattern below the moving average into that first pullback can really be some easy money as we run higher. All right, guys, so that's definitely some ideas there on how to buy it. If we go sideways here, very similar here to the S&P. If we were to go sideways here right now, first thing you want to do is think about, where do I have levels of resistance up above? Get up above the high of that range into some areas of resistance. Wait for those buyers to come in, try to buy. Remember, right now, it's not a reversal. This is not a reversal. It's a bull market. Sorry, it's a bull push into a range. This is a very debatable pattern right there. Very low probability trade because now that range below us is a magnet, right? So we got to make sure we respect that. Once those buyers are to buy that, I can then short that drop, right? That pop going back down into that trading range. And I'll tell you right now, stuff like this has a tendency to really run and collapse going lower. And then that's exactly where you can grab those shorts, like I mentioned earlier. Same basic idea, right? Go sideways here. That becomes the magnet. We then pop above the magnet. All of this momentum hasn't gone anywhere. It's still there, right? It's still there. And so we want those buyers to fail and then sell that, what we call sell the rotation, right? Sell that rotation back down again. That's, again, some kind of variations we talk about there on the S&P. We can also, of course, if the market was to go sideways here for a while, we could also, of course, look for that start to get that grind going lower, that shallow pullback, and then, of course, that trap above that high. So as you can see, there's definitely no shortage of pretty good setups here on both the S&P and the Nasdaq. They're very similar in some ways. They're also quite different in some ways. So we're going to see how this thing sets up here. Buyers want to retest that weekend gap. Bears, of course, want to retest that low and then potentially, like the S&P, down to that measured move, which is also that 14,700 level, which is a huge area of support on a 4-hour chart. We're looking good. S&P is done. Nasdaq is done. How am I doing so far? Are you enjoying the video? Hope you're learning something. And again, hopefully you've grabbed that free trading class I mentioned. If you're trying to earn income in these markets right now, that quick start class it'll give you a shortcut to get there faster. What's going on the gold here right now? Over on the yellow metal, gold is it's kind of a classic bear market into a trading range. We had that big bear move down last Thursday, if you recall, kind of a squirrely end of the week, right, as we went into quadruple witching. It's basically just one big range. That's basically all this is. It's a bear market into a trading range. What do we do with a bear market, or what do we do in a range? What's a range? A range, of course, is a magnet. So what do? You find levels of support below, and you buy going back up. You find levels of resistance above, and you sell going back down again. That's what you do with ranges, right? Now, we have a very distinct bear bias right now, so obviously selling at resistance levels up overhead is going to be a little more desirable, right? Definitely a little more desirable. One thing about this particular area you'll notice is I measured the amount below the range. I projected above the range, and we're sitting a great spot here right now for these bears to get short. So the bears would love to come back down, take out those lows. And of course, in the defense of the buyers right now, the buyers also do have some opportunities. You can see here we are rotating from below that trading range. Whenever we rotate below the low of a range like this, all of this momentum now, this could easily keep going. There's no reason why it couldn't. The odds right now are definitely on the sell side, but the buyers have everything they need right now to push this thing higher here. The buyers would love to get back up around this 1780 area. Get that big kind of range we had beginning of the month, last week, as you can recall there, right? That 1785 area. That'll be an easy target for the bulls. Big magnet back up there, just short of that 1800 big round number. The bears have another big level down here at 1718. So should be a pretty interesting day no matter what we get here for tomorrow. So how do we buy it? How do we sell it? What are the best ways to trade this sucker going into tomorrow? As you can see, I've got my channel already drawn up on this. And so I love the fact that the buyers, is this trap right there? Yeah, good pattern, but bad location for it, right? Good pattern, good idea, but not the right market conditions for it here, right? That's definitely not the setup you want. You would think maybe they would learn their lesson from that one back here, right? Strong move up, shallow pullback, higher high in price. Not enough, right? Not enough, and right back down again. That is pretty much what I am looking for the gold here to go back down to retest the low. Now, I shouldn't say looking for. I'll take whatever market gives me, right? But this is definitely one of my favorite trades here for tomorrow. What I wanted to think about right now is think about how the market popped up. Again, if you look closer, you can see it's a trap entry there. But, simply put, the buyers, of course, are to buy the pullback, right? Where do you think all their stops are? Yeah, the buyers' stops are hanging out right below this low. So I can use a failure pattern going lower. And then remember, we talked about this before on the E-minis. You can also now mark up that new channel and then look for that trap. Now, the channel's a bonus. You don't really need the channel, but the trap is definitely going to be, I would imagine, a pretty good priority here as we go lower. So again, we pop up. The buyers are running right into major resistance. Let those buyers try to get long, right? Off the lows of that channel I mentioned earlier. Once we get a nice strong signal here, right, that will spook all those bulls. Their stops are sitting right below that low. I can sell into stops with a failure, right? A failure, we call these number 3 patterns on our trading cheat sheets. And then, of course, a number 5 setup, we call a trap setup, right, off of that high. Now, keep in mind, this trap setup could be lower. It definitely could. Sometimes we'll see the market pop up, the buyers will fail, it'll really run, you know what I mean? And that's fine by me. I'm not so worried about that as long as I can get that trap. Right? Remember, anytime we see a real strong move in one direction, the odds are very good we get another leg, right? It may not keep going forever, but we're going to probably get a retest of that area there. So, even that will be okay, right? Even if we were to get really collapse there, then get that, right? Then get that trap right off the high there. So those could work in a few different ways there. Can I buy this if it goes lower? But I'll tell you, buying this thing as it goes lower is going to be really, really difficult. The only way to get long on this thing would be down around these lows. Let's say, for example, that we do get that failure, we get that, trap signal, right? We're shorting this thing back down again. At that point now the bears got their money. We take out those lows. How do you buy down here? Very carefully, right? Why? Because we're overall bearish, and then the short term will also be bearish. So you guys can probably guess. You can probably guess what the best setup would be to sell off that low. Well, first of all, most of it has to do with how the market's down there. If the market, for example, let's say the market kind of strolls on down, right? It pops up, kind of grinds down. Okay. If that's what happens, I can now use the 2-try rule. Let those bears try once. Let those bears try twice. Again, remember, you want to respect that momentum. The range above us is definitely a magnet, but again, you want to respect the momentum here. Those bears will have their exits, right? Their stops, their pain points are right above those highs. That's an easy long, right? Now remember, you want to let them try twice, right? That's the most important factor there as we go lower. Make them try twice. That way you'll rope in all the bears. And again, if you want to, if you're trying to earn daily income in these markets right now, you've got to put yourself in the most reliable entries. That is by far the most desirable way to buy off a range low when you've got all of that bearishness. And then don't forget, as we rotate higher now, find that new channel and again, grab the entry right off that low. So 2-try failure into that rotation going higher there. That's a pretty easy trade. What you want to be careful with is let's just say, for example, the market just simply falls out of bed, right? And it sprints running lower. If it sprints running lower, at that point, you're probably going to get another leg in the same direction. Okay? What I'll typically do in these situations is I'll look for a quick little pop, a buyer failure, and a double bottom at that low. There's money to make. There's money to make if it really rips lower. Because remember, it's overall bearish, right? If it really rips lower, you're going to probably be able to short the top of that channel. Again, it may not keep going forever. You know what I mean? It might, right? But it may not. All we know is we see a strong move in one direction. There's a good chance we at least retest that low. There's definitely money to make, right, in that short. Once you get that double bottom, then it's the 1, the 2, and the back up, right? Does that make sense? Does that make sense why I say that? If it's really, really strong, take that next short. Right? Really, really strong. Take that next short. Get that double bottom. If it keeps on going, great, right? Keep on trailing it. If it doesn't, it bounces, then it's 1, it's 2, and your stops get hit, right? And we're buying it back up again. So it all depends on kind of how the strength of that thing looks as it goes, right? As it goes lower. All right? So that's how you trade it, selling it going lower, right? And buying it going lower. Now, at this point, the buyers have to hold this if we want any possibility to be buying as we go higher here. The buyers want to go back to 1780, 1785 up there. Can they hold the pullback, right? Can we get a 1-2 jump into the Asian Open here? Can I mark up the high, mark up that low, get underneath the moving average, trap in those bears with a failure setup into a pullback combination? Easy money there. Great trade too, right? Failure, pullback combo. We see a lot of failures in the pullback combos off the lows of channels. And then, of course, if the market was to simply punch and start to rip higher, again, that's very much a breakout, right? At this point, we're kind of sitting right at those pendulums, we call them, right? The pendulum swing. At this point, if they get a strong, again, blast higher up there. If it really blasts and runs higher, remember, watch those, we call them trap, right? 2-try trap. So strong run up, shallow pullback, trap. Again, think of it like a short squeeze. All those bears that are short back here, they're now getting out. And as they get out, the market just jumps, right? You're not going to get a deep, deep pullback. You know what I mean? You're not going to get that deep pullback. If this thing just sprints and runs higher, it's a short squeeze. Okay, short squeezes are not like regular trends. You want to find really steep channels, really shallow pullback traps. And obviously tomorrow we'll know more. We'll do it a little more together tomorrow morning in the trade room once we see some more information on that. But that's how you buy it, right? As it's going higher. You can see, right, like this is a great example of this. It's just not there yet, right? Strong move up, shallow pullback, higher high. If you see that setup up here, right, same thing. That's the 2-try trap right there. Again, we're way too bearish at that point, right? We're way too bearish at that point with that big pop down. Now we've taken out that low though. Now they've retested that low. So now, if this market does want to pop up, run, I can definitely grab that trap. All right, guys? So keep that in the mind for tomorrow morning. Again, if you're trading on your own, make sure you're careful there trying to pick reversals here on the E-minis. And don't get too aggressive buying up here on the gold. If you're joining us tomorrow morning, though, 8 o'clock Eastern time in our trade room, the plan is in front of us. I'll see you guys tomorrow morning, 8 o'clock Eastern time. We're going to have another great day tomorrow. Had a fantastic day today with everybody this morning at the opening bell. Hopefully I'll see you tomorrow morning, 8 o'clock Eastern time. I'll put all of the membership information in the description of the YouTube video. I'll put a big button for you guys to learn more about different membership specials we got going on. I'll put all that stuff in the description of the YouTube video. I'll also put a big button for you on the website here, right below me tonight on our website. Don't be afraid to call the office. I'm always here to help. If you guys have any questions, we got live chat on the left, live chat on the right, and you can always drop some questions in the comment section below if you have them. All right, guys. Boy, what a fantastic day today. Hope you enjoyed the video tonight. You got a game plan for tomorrow. Now follow those rules. Don't go trying to pick tops and bottoms in these big moves we saw today. And hopefully I'll see you tomorrow morning at the opening bell. If not, we'll come back and do tomorrow, right? Same time, same place tomorrow night. We'll walk it back and we'll do it all again. Get ready for Wednesday's trading session. In the meantime, though, have a great Tuesday if I don't see you guys tomorrow morning at the opening bell. That's it for me, though. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.